Hello and welcome to another insightful episode of our CU online podcast, Decoding Mutual Funds, Reading Financial Statements for Smart Investments. I am Professor Shabnam, your moderator, and we are doing into a crucial yet often overlooking aspects of mutual fund investing, understanding financial statements. Mutual funds are widely market based on past returns. But is that really enough to make an informed investment decisions? To help us decoding the financial statements of mutual funds, we have with the seasoned expert Professor Rachit Agarwal, specialized in investment and financial modeling. Welcome to the show, sir. So, sir, as usual, we find out that investors always make mistake regarding the investments. So what you perceive that as important financial statement that must be analyzed when we are going for mutual fund investments?
Sure. When it comes to financial statements that should be there to invest in the mutual fund, I think there are three major financial statements that should be considered. The first one should be balance sheet. Then we have a P&L account or income statement, and the most important, that is cash flow statement. So balance sheet, basically it helps to identify the company's asset and liabilities, how the fund is going to use the asset or the liabilities, their overall investment pattern. Income statement would explain the profitability and operating activity of any business or the fund. When it comes to cash flow statement, basically cash flow go beyond the profit, because profit is not the good parameter to estimate or to justify the company's return. Cash flow explains the overall operations and the liquid cash the fund is having. So to invest in any mutual fund, I think these three are the major important statement that should be looked over.
So as we know that these statements are lot of numbers and figures are there. So that makes confusion in the mind of investor that how they will figure out which figures and values are very important in mutual fund investment.
Absolutely. Whenever we look for any statement or the annual report of the company, so we find that it seems like very complicated file, because annual report consists of 400 pages. So basically, if we just want to identify the major key metrics, so there are 4 or 5 things that should be identified. When it comes to P&L account, there should be revenue. That is the most important thing for any company, that should be there. Then profit, or the last 3 to 4 years profit we can compare. Along with that, the liquid assets, the current assets, what is the current the asset level for any fund, for any company. Then fixed assets. So these are the important metrics that will be available in the financial statements. Apart from that, few metrics can be available on the websites, few internet websites like PE ratio, price to sales ratios, EPS. So these are the important metrics to help any investors to check whether the stock or the fund is overvalued or undervalued. Because if the PE ratio is high, so that can be estimated that it is overvalued.
Yes.
So it should be low as much as possible. Same with that, EPS should be high. So these are the few important metrics that should be carefully identified whenever we make any investment.
So as we are looking at some investments are there, so we will go for the mutual funds, one of them, very important aspect. Like different company is showing different results in their reports. So there is always like a differentiation between which one is a genuine one investment or which one is a fake one. So how we can identify those financial statements and reports that we will find out that there is a well managed way of preparing the reports and data that is presented is well true?
For that, we can go with not only with the few parameter, because I have seen that many new investors in the market, they just look for the past returns or the past performance of any fund, which is not enough, because past performance of any fund would give you only limited result or the limited data. For example, after COVID impact, we have seen that many stocks have gained the market portfolio, and many investors have earned good amount of profits from the market. But I would say that this is not the only way to just to identify this should be the only parameter. We can include many parameters, let's say the expense ratio for any fund, because sometimes expense ratio would give you would kill your returns. Whatever you earn from the mutual fund, if there is expense ratio, that would harm your return. Secondly, you can also estimate or identify the fund manager's profile, how many funds he have managed, what is their investment philosophy, because there are three approaches that I have seen in last few experience. Few funds are related to the growth approach, few funds are related to income approach, and few funds are related to the dividend approach. So what is your or the investor's approach to look for the investment? If a person is getting long term returns or the long term investment, so definitely he should go for the long term funds. So identify the investor's philosophy or the fund manager's philosophy, that is very important. Third factor I would say consistency, because whenever we talk about the capital market, that is very subjective area. So consistency is the only way to get off from the market in a profit situation, because in right now I think in last few months we have seen the market is continuously declining. So just to be patient and see the consistency of the fund, that should be there.
So as sir, we know that the financial statements are overwhelming and complex for many investors. So any tips for the investors that how they can go for the investment process?
Financial statements seems to be very complex, but any new investor would identify few important things from any annual report or any financial statements. The first is investor can look for the continuous growth when it comes to revenue or profits. Secondly, investor can compare year over year comparisons. So I think the ideal would be for the last 3 years and last 5 years comparisons. That would give you, I think, better result of the company. Next, investor can check few ratios, important ratios, including debt to equity ratios, current ratios. Debt to equity would give you long term vision for the company, and current ratio would give you short term viability of the company. And in any annual report, there is one important chapter, that is management discussion and analysis. This chapter would give you qualitative aspects of any company. So because in this chapter, company's owner, key management or board of directors would give you their future visions, future projects where they are going to invest. So this is very important for any investor to identify what they are planning to do in near future. So these are the important things that can be identified from any annual report, just to make it easy and approachable for the investment.
So sir, as we are finding out that the new investors, sometimes they need some tips. So any 3 golden tips you want to give?
Basically, tips, I would say that 3 golden tips or the 3 rules that any investor should follow. The very first, identify your objective, your investment objective, and align your investment objective with the fund or with any your investment. Because as I already explained, that a few investors, they look for huge return, but few investors, they look for continuous result. So there is a huge difference between these two. If you want a huge return in short term, so you have to go for the high return stocks or the high return mutual funds. If you want consistent results, consistent returns, so that return would not be very high, but that would give you 100% surety that the return would be there. So your objective should be aligned with the fund's objective. Second is diversification, because it is very common tip that every expert would give, that you should diversify your portfolio with your fund. If you have enough funds, so you should diversify in at least 3 to 4 assets. I won't say that you should invest your money in mutual fund only. You can go for the gold, you can go for fixed assets, you can go for FDs. So these are other investment avenues that you should approach if you want to really invest your money. And the last is that is actually a very important thing for any investor. Be patient, and consistency is there in the market. A regular basis, you have to identify your portfolio. You have to look for the market returns periodically. So these are the consistency you have to show in your portfolios and be active in the market.
So as if I will consider that myself as an investor, I am going to invest somewhere. So any tips for me or for my listeners that where they can go and which type of investment schemes now that are coming in the market new, which you want to highlight?
Sure, ma'am. For any new investors or for you as well, I would say that always start with the small amount. Whether that can be SIP or that can be lump sum investment, it's up to person. But I would say that you should start with the minimum SIP and identify the stocks which has lower NAV, that is net asset value, and you must identify the holdings of any mutual fund, because holdings would give you that where your money is going to be invested in which companies. So if your holdings, if the fund's holding is in the top 50 companies or top blue chips companies, so definitely you would get a higher return. Apart from that, you can identify good stocks or good mutual funds where few parameters are very important, let's say alpha and beta. Alpha would give you the detail about the fund's return over its benchmarking. Beta would give you volatility, means what is the risk parameter involved in the funds. So these are the few things that you should identify over and above. Apart from that, yes, past performance is also important. So these are the 4 or 5 things that can be identified, and you can select your best mutual fund for the investment.
Thank you so much, sir, for your insightful session and discussion with me regarding the mutual funds. So listeners, if we find out this episode very useful regarding the investment, we have not talked about only about the investment in mutual funds, but various aspects as Rachit sir has discussed with us. So you have various approaches. You can go and connect with the things and make your investment fruitful for you people. I hope that you will enjoy this episode and looking for the next episode of CU Online Podcast. Thank you. Happy learning to all of you.